Welcome to the Focus Capital Podcast, an ongoing conversation about real estate, entrepreneurship, and personal development. I'm your host, Stephen Simpson. If you haven't already, you can get access to our investing guides and newsletters on our website, focuscapital.ca. That's focuscapital.ca. And on this episode, I sit down with Chad Griffiths. Chad is a very successful commercial real estate broker based in Edmonton, Alberta, and the host of the Industrial Real Estate Show. Since 2005, Chad has completed thousands of deals for his clients and has personally invested in over 150,000 square feet of industrial properties. We talk about getting started in brokerage, the industrial real estate market here in Canada, and Chad's social media presence, where he's been providing a ton of value to investors across North America. Chad and I have a great conversation that I think you will get a lot out of. So with that, I hope you enjoy the show. Chad, welcome to the podcast.
Hey, Stephen, thanks so much for having me. Excited to chat with you.
So, you're someone I've seen a lot of on social media. You seem to keep coming up on my feed quite a bit. I think, you've got a certain presence going on LinkedIn and YouTube. And obviously you've got a few things going on, which is kind of promoting your initiative of industrial real estate and kind of talking about that, in social media these days. So, just as a start for the podcast, I'd love to hear about your background and just sort of how you got started in real estate and maybe just some of the things which led you to kind of choose industrial real estate as the asset class for you.
Yeah, it's a great spot to tee it up. So I originally got into residential real estate, and this goes back 20 years now. And I was buying and selling some houses with a couple of friends and partners, and we didn't really make any money. We didn't lose any money, but it wasn't going all that well. And I decided I really liked real estate. So it seemed like a natural extension to just try residential real estate as an agent. So I did that for a year in 2004 and just grew tired of that very quickly. It's a grind. It's a hard schedule. You're working evenings, you're working weekends. There didn't seem to be a whole lot of loyalty there. So the next extension was to look into commercial real estate. And I knew a few people in the industry. My uncle is an architect. I had a few contacts who worked in different areas of commercial real estate. So started going down that road. Really had no idea where I was going to fall, except I was appealed by that sexy commercial real estate image of office towers or big shopping centers or selling a golf course. Like that was what really stood out to me at the time. And it just so happened the company that I ended up joining in 2005, so just 19 years, I believe it is now. In that company in 2005 that I joined happened to be primarily focused on industrial real estate. And I had very little knowledge on what industrial real estate was at the time. And much like most of the people that are in my life right now, like my family, my friends, they still don't have very much of an idea what industrial real estate is. That was me back in 2005. And it was purely accidental or serendipitous, as I like to say, because it turned out to just be the best thing that happened to me, because I went from having no idea what it was to it really just becoming a passion of mine. And 19 years later, I'm a partner at the company. I've started investing in properties 10 years ago. So I've got a portfolio of properties myself now, all industrial. I moved away from residential entirely. So I've got a portfolio of it. My career is still actively in brokerage. And then I talk about it extensively on social media. And that's probably why some people, for better or worse, probably see me too much sometimes. That I imagine some people get a little tired of seeing me talk about industrial real estate so much. But it really has come from me having no idea what it was to just being an absolute passion of mine, where I live, breathe, and sleep industrial real estate.
Yeah, well, I think it's fairly obvious. I mean, for guys like me who are involved in industrial real estate and have an engineering background as well. I mean, I think what you're doing is making industrial real estate cool, right? Like, I mean, you're out there, you're talking about it, you're having a podcast, you're going into some of the, the technology behind some of these buildings and why they're important in today's market. So, yeah, I think it's the platform that you have now on social media is really allowing people who are in that niche to kind of come together. And that's what I'm seeing definitely. And, probably how you and I got linked up in the first place a few years back, where, you were posting and I was commenting on something, and that's just sort of is how we got connected. And so, just with respect to the social media front, I'd love to hear a bit more about how that has sort of enhanced what you're doing, and maybe some of the things that you wouldn't have otherwise gotten into, and sort of how has that sort of helped your career and progressed it over the past few years.
Yeah, it's such an important topic, and one that I enjoy talking about because I've learned a lot on social media. So I've been on Twitter, or X, I guess. I'm still going to call it Twitter, but I've been on that for 15 years. I've been on LinkedIn for 15 years. I've had my YouTube channel and podcast for 4 years. And I would say I didn't really understand what social media was capable of, or understanding how to leverage it and benefit from it, until probably 2 years ago. And that was through studying a lot on what works and what doesn't work. And I was a prime example of what didn't work. I had a few things that went well, but it wasn't until I started changing my perspective on what to post and how to interact with people in there that I started to gain more momentum. And that was moving from posting anything that didn't add value to trying to everything that I post now. I'm consciously thinking, if somebody's reading this, whether they know me or they don't know me, and they probably don't care to know me, will they at least get some value from it? And I think if someone reads a post and they're like, oh, that was interesting, or I hadn't thought about that, or just an interesting tidbit, then they're more likely to engage with that, or perhaps see if I have more posts to offer. And then once you start having a library of good quality posts, it has a compounding effect, because then people are like, okay, well, this is actually a resource, not just somebody talking about themselves. And an example of that is, most people on social media have no idea where I live. I think by my accent, a lot of people can pinpoint it down to Canada.
Right.
That's one I get called on all the time. But I don't even talk about where I live. I don't talk about what company I work for. I don't talk about myself much at all, unless I have an opportunity like this where we get to have this conversation. But on social media, I don't talk about myself. I'm always just trying to put value out there, so that if somebody sees it, it's something. It's the equivalent of, so you're an engineer, I'm in brokerage. It's equivalent to being client facing, as opposed to you being an engineer and somebody asking you, hey, well, how can you help me on this project? And you go into a 30-minute speech on how great you are and your background, when really they just want to know, how can you help them?
Yeah.
That was the shift that I took in social media, where everything that I put out there is just free content on my career, on what I've learned, mistakes that I've made, observations that I've had and continue to have. And that's what really accelerated my growth. And I don't keep a pretty good track of what the numbers are. Like, I'm not following it on a monthly basis. I'm guessing my curve would look somewhat like that hockey stick, using another Canadian cliche,
Hmm.
around that time, though, because then you're providing something to someone, instead of just expecting them to be interested in you. And I just learned a long time ago that most people, they just have too much on their plate. They have too many things to do. They're worried about too many things. They don't care about somebody on social media, on what they had for lunch, or what deal they just did, or what property they just listed. That nobody cares about that. But if you can provide something to them where they walk away and they're perhaps they walk away feeling somewhat fulfilled, that they learned something, or they're entertained about something, then I just think you increase your chances of more success. So, in a long-winded answer summed up really shortly, I changed my social media to be all about the person who might be reading that post or watching the video.
Yeah. Well, and I think there's a lot of power in that, because what you're doing is really becoming a resource to people. And
Mhm.
and so that resource and that value that you provide can pay off in a lot of ways. And it might pay off directly, it might pay off indirectly, but even if it doesn't, you've helped other people learn a bit, right? And you've kind of, given somebody some information which maybe saves them some money, and maybe saves them some time, maybe gets them out of a bind or whatever they're kind of, involved with at the time. So yeah, I think that's sort of a great strategy to have, that you push that content out there, be valuable, be a thought leader in the industry, and then, you're increasing your brand as you go, right?
Yeah, and it's led to some awesome opportunities from speaking. I've given presentations to a number of universities. I've spoken at national conferences. It's led to some really cool things over the last couple of years. All of that came when I started changing from that inward focus on look how great I am when nobody cares to all of a sudden being here's some information and here's some value. And there it was clear, like there is a complete delineation on how the first 12 to 13 years of social media went for me to how the last couple have gone.
Yeah. Yeah. So I'd be interested to know, like, you're one of the only guys that I see out there who's an industrial broker, who's really, I guess, active in terms of their social media, their podcast, that sort of thing. And maybe you know a lot more than I do, and maybe you have other connections, but from sort of the feed that I get, you're one of the guys that I see a lot of. So I'd just like to kind of get your thoughts on, what you're seeing in terms of other real estate professionals in the industry and how they're using social media, and me talk a bit about, the industry now. And I've sort of found industrial real estate, because that's what I'm involved with. There's a lot of old school people. I mean, there's still guys that are just cold calling all day, and I'm sure there's the odd fax machine kicking around there somewhere, but it's really becoming a lot more modern. And I find the residential guys, like, they've been using technology for a lot longer, whereas industrial real estate, maybe commercial real estate as a whole, is a bit bigger animal. It's taken a bit longer to change and that sort of thing. So I'd just like to get your thoughts on how, industrial real estate professionals are kind of adapting to technology and using social media.
Contrasting it to residential real estate is a great way of doing it, because you're right. I'm very in awe of how good some not all, but some of the residential agents are at personally branding themselves and
Yep.
the information they put out there. I think that they're light years ahead of the commercial and industrial industry. I think that there's a couple reasons on why industrial specifically has been slow to adapt. One, a lot of these brokers work for large publicly traded companies, and there's handcuffs, for lack
Yeah.
of a better term, that get put on them in terms of what they can say and what they can post. The PR and the compliance rules that they have to go through are significant. And even if they are able to dance through those and they have the appetite to go through that process, do they want to risk saying something that could get them in trouble if they responded to a comment the wrong way? Anything that just was perhaps a little bit too impulsive. So I think that rightfully so, there's a fear that a lot of brokers have, that they don't want to say something offside. It could reflect poorly on the company, it could reflect poorly on their clients themselves. So I think that that's a main one. In light of that, though, there still are some brokers out there. I'm seeing more and more get into it and dip their toes in the water. I think beyond the compliance rule, I think that there's a lot of brokers that just perhaps they're busy. A top producing broker is busy. They don't necessarily need to be going out and trying to get business development from social media. And they might not even be convinced that there is business to be earned from social media, or that it could be a 2, 5, in my case, 15-year grind of doing it. That is a very compelling reason. It does take a lot of time. Nobody can just go onto social media, start a LinkedIn account, start posting their for sale listings, and all of a sudden get a lead off of it the next day. It is a long process. So I think when you stack up the reputational risk, whether guys feel that there's any, I say guys collectively, including
Sure.
men and women. There's some awesome women brokers out there. Just say guys probably too often, but I think they'll look at it and say, we run the risk of saying something embarrassing or upsetting a client or a company. There's no immediate benefit for it. I'm busy already. And it also takes a certain type of personality to do. It's putting yourself out online comes with risk of just being shamed And I've heard comments from it. I've heard comments from other brokers in the industry that say, why is he doing this? Why does he have a YouTube channel? Why is he talking about this? And most people would probably say, that hurts. That's an arrow in the back. I just don't care. Like,
Hmm.
but that's something that you either have to have that naturally, or you just have to build up a thick skin for it. And I was probably more building up a thick skin side of it, but also with just some confidence coming into it. It's this very unique set of skills and circumstances, avoiding any compliance issues. It almost takes like the right circumstance. So, but it wasn't easy and it wasn't quick. So I think that's again a long-winded answer, but it's a complicated scenario that doesn't have a simple answer on why more people are doing it. But personally, I'd love to see more people get into it. I'd love to see some developers get into it, engineering like yourself. There's so much that still needs to be taught in that public forum, and there is a healthy appetite for it. So I would personally love to see more. I've offered to help people. I've offered to help my competitors. If they want to get into this space, I'll be more than willing to share what's worked and what hasn't worked, because I know that there's an appetite and there just isn't a whole lot of people talking about it.
Yeah, fair enough. There's a lot of very valid points you just brought up, and I think, yeah, to your point about, some brokers really don't need to, and so it's sort of, they got a good thing going, and they've got their network of contacts, and they know the players in town, and they may not see the need to do it. I just find it that more and more brokers are getting out there, again, just working on their brand and then leveraging technology. So it is interesting to see. I did want to ask you about your current role, and sort of maybe the evolution of that role. And you mentioned getting into brokerage initially and commercial real estate. Maybe talk a bit about how your role has evolved over the years to what it is now. You're obviously a partner in your current role, and obviously doing bigger deals. But maybe talk a little bit about how that evolution has rolled out in terms of first getting into to brokerage to what you're doing now.
Yeah, I started as just a entry level, know nothing agent that at the time didn't even know what industrial real estate was. I was that green, and I had to slowly learn everything from scratch. And the office was very helpful. There was a lot of older guys at the time who were great mentors and helped me along on that. And you're right, I did start doing a lot of small deals. That was uh, 2005 to 2008. A lot of small deals, but learning the craft, learning what worked, learning what didn't work. 2008, we hit the financial crisis. I'd say we were fortunate in Canada and in my market specifically, where we didn't have the same devastation as certain areas of the US did. So I don't want to say we coasted through it, because it still impacted a lot of people, but we didn't have the same pain. So I was so new it. I was only, by that time that came around, I was only in the business for 3 or 4 years. So it didn't impact me the same way, but I just kept cruising along. And 2014, after getting more involved in the industry and having some more deals and some more success, I was able to buy a small investment property with my partner. So him and I are business partners in the brokerage, and we're partners in some real estate. Him and I bought a small warehouse property in 2014, and then just kept trying to add one a year type of thing ever since, and still continuing to do brokerage to this day. Became a partner around the same time and bought that first investment property. So life has changed considerably from being a brand new agent, very green, to now partner at the brokerage, and myself and three other partners, we actually bought our building in 2019. So it's funny when I go into the office that I've been going to for almost 20 years, starting where I had no idea what real estate, industrial real estate even was, to now owning that building is a pretty cool feeling. So it's definitely evolved, but I still help a lot of small clients out. I have a team, my business partner and myself. We've got a team of 5 of us. So it depending on who's who's working on what. I might step in and help somebody out with a small deal. But yeah, generally speaking, I do chase larger deals when possible, but I'm not too proud to work on anything. I still do small deals. I don't want to say regularly, but occasionally.
Yeah, well, there's just a lot more of them, right? So I think just the
Mhm.
sheer quantity of those smaller deals, you can't ignore them completely. So okay. So what I wanted to do was just sort of bring it up to the current date and talk a little bit about, what we're seeing in the market these days. Obviously, the last couple of years has been a challenging environment, challenging market for lots of different real estate asset classes, just due to the interest rates and different things going on with the economy. So I'd love to get your thoughts on, sort of the current state of affairs of industrial real estate, maybe here in Canada and more broadly, if you want to offer your thoughts on that. As I mentioned before, I think real estate is one of those asset classes that's been pretty resilient over the last couple of years. It's been something that, along with residential real estate, is just a sheer necessity in the market today. So, I like to think it's weathered the storm pretty well over the last couple of years. But I'd love to get your thoughts on sort of what you're seeing in the market these days, and maybe some of the factors that are making industrial real estate what it is.
Yeah, I'd say the overarching theme of the last 20 years has just been a massive run up in warehouse space to accommodate e-commerce. And that accelerated greatly in 2020 for two years, almost 3 years. But that trend had been on an upward trajectory for decades. That has been the storyline that's captured most of the headlines that we see. It's captured a tremendous amount of investment money, as industrial was almost seen as the ugly stepchild of commercial real estate investing, much to my even how I looked at it when I got in the industry. People think trophy assets. So they want that office building, or they want the golf course. Nobody's thinking I want a 100,000 square foot warehouse in an industrial park. That changed over the last 20 years, where all of a sudden a ton of institutional money flocked into industrial. And that's in addition to all the people who are family office level or just large individual owners or JVs, all the people that had already bought into the industrial real estate story. Now all of a sudden there's that much more money chasing it. And then if you add in retail, which retail I think is a stabilized and might even be seeing a little bit of uptick, but there was a period there where retail didn't look great at all. It was the retail apocalypse, the end of retail. There, all the stories there were that retail was going down, so people didn't look favorably on retail. Then we went into the office crash starting in 2020, which I think we're still in the early chapters of that. So now office doesn't look great. Then you could look at multifamily. There's pressure on rents right now. There's upward pressure on expenses. I think multifamily is still a really good play. And that, if I were to invest in another asset class, I would look at multifamily. But there's still factors at play there. Where as an industrial, a lot of the companies are still projecting upward growth in rental rates. Prologis, as an example, the largest industrial property owner in the world, they're projecting 4% annual growth rates for the next 3 years. So if the largest industrial owner is projecting that, whether it trickles down exactly the same way to everybody else or not, that's still a great sign that the bellwether of the industry is still predicting growth in rent. And they're all net leases, so you pass any expenses through. So if property taxes go up, it doesn't erode the net income the same way that it would on multifamily. So teeing all that up, warehousing has been the main story of the last 20 years. We're actually starting to see a shift in that. And it's partly driven by just a slowdown in the economy, which is affecting retail sales, online sales, just sales in general. And that industry was also probably overbuilt. I think most analysts would say, looking broadly, the inventory has been overbuilt in the last 2 years. And that's not everywhere. There's some markets that are still very hot and have very low vacancy rates, but there was a lot of inventory that got added, and that these developers were anticipating that growth that we saw in 2020, 21, 22, they kept thinking that was just going to go on forever. And of course it hasn't. So I think we're going to see softening on that warehouse side, where it's just going to take a while for all this new space that got added to be absorbed. But what is interesting, and this is something that I'm following very closely, is that the other side of industrial real estate, so warehousing is one side, manufacturing side is another element of it altogether. That's seen a considerable uptick in growth right now. And all you need to do is look across major markets in North America right now and see all the multi-billion dollar manufacturing properties that are being built, partly from all the financial incentives and tax incentives and stimulus, and different levels of government really want to have that manufacturing onshored or reshored back to North America. So there's a considerable amount of manufacturing demand right now, and that inventory hasn't caught up to the same level as warehousing did. So my bet, and this is actually my portfolio, is manufacturing properties and flex properties. I like the manufacturing side of it. I think that that is going to be a very appealing part of the business going forward, because I don't see that trend of onshoring, reshoring slowing down. There's just too much geopolitical pressure right now. There's so many things going on in the world, and supply chain bottlenecks and issues getting product, that I think that there's going to be a really concerted effort to onshore, reshore more stuff, which is just going to mean that we need more plant space in North America. So I know I've given you a lot of long answers. I'm sorry. I apologize for talking so much on this.
All good.
I'll try to shorten those down. But on the warehousing side, I think that will be probably flat, perhaps some downward pressure in the next few months. But I still am bullish on that as well. We're just, that e-commerce trend is still going to look upward. So I'm still bullish on that long term, but where I'm quite excited right now is on that manufacturing side.
That's interesting. So I guess when I'm hearing manufacturing, and maybe other people are thinking the same thing too, it's not necessarily heavy industrial, but it could be, like you said, plant space where there's some assembly or there's some kind of more clean space production that's going on versus the more traditional sort of heavy industrial that many people might think about with, like, auto plants and things like that, where it's just more of a complicated process. But maybe talk a little bit more about that, because I think I'm seeing that as well, the sort of onshoring trends. So maybe talk a little bit more about that asset class specifically within industrial.
Yeah, and it goes back to just industrial is a very broad category.
Yeah.
And I've asked some people recently what they think of when they hear industrial, and the responses are actually very broad as well. So I think at some point we might even have to delineate industrial even further,
Yeah.
because when you're talking about it. But on the manufacturing side, I like to say that a manufacturing building is anything where things are made. So that can be as simple as a semiconductor, like TSCM, building that $40 billion facility in Arizona. A semiconductor, very clean, done in a lab, essentially, all the way up to a Boeing airplane being made. And Everett is the one that I always reference, in just outside of Seattle. 4 million square foot building, everything, all the raw materials come in, they spit out an airplane. They've probably cut a few corners as of recently, because some of those airplanes that came out,
Yeah.
I don't think are as in good a shape as they were a few years ago. But it's essentially the same thing. It's just something where things are made. So no matter what it is, as simple as it is, it could be a one-step process all the way up to a multi-step process, but it's just things are made. So you're right. Heavy industrial is probably what a lot of people would conjure up when they think of a manufacturing facility or a factory, but it can be something very clean. It can be a car manufacturer. So there's a ton of EV properties that are being built right now to accommodate EV demand. The gigafactories, the buildings that are being made just to make batteries for these things, all the way up to semiconductors, very intricate, specialized things. These aren't made in office buildings. They're not made in retail centers. They're made in industrial properties. So that's where a considerable amount of demand is happening. But there's also all the ancillary requirements that come from that. So if a big factory goes up in Arizona, a $40 billion factory, all the components of that, all the robotics need to be serviced. Everything in there is going to have HVAC requirements and electrical requirements and the maintenance of all the components in that building. The offshoot of that is going to be considerable just for all the businesses that will be required to keep that building operational. So that's where I get excited. Is not necessarily on a $40 billion facility. That's obviously way out of my capacity to ever invest in. But I could invest in a 20,000 square foot building that might have 4 companies that are servicing and attending to what that building needs. So that's where I get pretty excited about it. But manufacturing, very broad, like all the way down from making a pen to making an airplane.
Yeah. Yeah. And everything in between. Yeah. That's
and everything
cool.
in between.
Yeah. So maybe stemming from that, we can, maybe 2 industrial guys here can geek out a little bit and talk about some of the guests that you've had on your podcast. I know I listen to your podcast quite regularly. I like the kind of guests that you're bringing on. Maybe talk a little bit about some of the highlights that you've had on the podcast. Who are some of the influencers and maybe some of the topics that you found most interesting that have come on recently?
Yeah, there's a few that jumped to mind right away. First, Walt Rakovich, who used to be the CEO of Prologis, so the company that I mentioned earlier, largest industrial property owner in the world. He was the CEO, I believe, until 2015. Might have my dates off a little bit there, but he was fascinating to just have an hour talking to a former CEO of a Fortune 500 company, where I could only imagine how busy his day was when he was in full swing. And he was just such a humble, giving, very happy to talk. I didn't feel once that I was being rushed or I had to move on quickly. He was just very generous with his time, and he just added a ton of value. So that's probably my favorite one, just from how awesome it was to talk to him. I interviewed a guy last week, Aaron Halfacre, who, great real estate name too, by the way, Aaron Halfacre. He's the CEO of Motive Industrial. So whereas Prologis is focused just on the warehousing side, he's focused on the manufacturing side, which I talk about both quite often, but I love the manufacturing side more. So to geek out with him for an hour was also really cool. And then there's been one thing I try to do is just cover every topic imaginable. So I had one guest on where he just talked about warehouse racking, and to think, how could you talk for an hour about warehouse racking? Well, we did it and I had fun with it, but I've had architects on, I've had electrical engineers on, developers, anything to do with industrial real estate, no matter how out of the box it might be, I'm interested in having that conversation. So I think we're 150 some episodes that we've done now. And in my mind, I could go forever, just because there's some of those guests I can have back on to just get their thoughts on what they see going forward. There's so many topics I haven't explored that it's, even if it's just me and you that listen to it, that's enough for me, because I just legitimately love talking about this stuff. So I'm glad to hear when other people get some value from it, because then the time and energy it takes to put these on.
Yeah. Well, like you said, I mean, there's so many different things you can get into. I was talking to somebody the other day just about due diligence when you're, going in and acquiring a new property. And you could write a book just on all the different stages of due diligence and all the little things you're going to need to look at when you're investigating an industrial building, and environmental issues might come up, and, electrical distribution systems and parking lot. Like, I mean, there's just so many different things. And you're right. You like, each one could get its own series of podcast episodes. So, but again, I think going back to the whole concept of finding your brand and your niche, I think these topics are resonating with people, because, for those of us who are in the industry, it is providing a lot of value. There's a lot of interesting stuff in there. And, I'm just thinking, a couple of the guests that you had on, which really resonated with me. One was Chris Powers, when you had him on.
Yes.
Really excellent.
I agreed. He was fantastic too.
Yeah. He's doing big things down in Texas, and really just completely focused on Class B industrial. So he was one that I got a lot out of. Gary Chesson, I believe that's yeah.
Yeah. Create
So he
Docker,
was the other
creating
gun,
Trinity.
and yeah, with that Trinity
Yeah.
book, and so he was excellent as well. So I think you've got a good variety of guests there, talking everything from the real hardcore sort of technical concepts to the more overall sort of business strategy things, which I find really interesting. So yeah. So I don't know. Kudos to you because it's a really good podcast. I
Thank you.
personally
I
get a
appreciate that.
lot out of it. Yeah. Yeah.
And the cool thing about it too is that I've just got to know so many people across North America. Like I've even interviewed people in London, China, somewhere else in Europe. I interviewed someone. So having conversations with people all over the world, and like to me, that's cool in itself. Whether you even recorded it or not, just having a conversation with somebody like that is so fun to me. That yeah, I love it. So thank you. I'm glad to hear your feedback on that too.
Yeah. Awesome. Awesome. No worries. Sort of switching gears here, I wanted to talk a bit about, those people who may be interested in investing in industrial real estate. So obviously that's a very broad topic. There's different ways to invest, but maybe talk a little bit about what you're seeing in terms of, you know, investors coming to the table, investors reaching out to you who maybe want to dip their toe in the water, who are looking at industrial real estate. What are some of the things that they should be thinking about? And I'm not talking about an institutional investor, thinking about it, but maybe someone, who's had some experience investing in multifamily or in, maybe sort of high end sort of residential properties and wants to have a look at industrial as an asset class. So maybe what are some of the things that you would talk to them about?
Yeah, and it's topical because I have conversations like that regularly. And it could
Sure.
just be someone that owns 10 houses and they want to
Yeah.
invest in an industrial instead, all the way up to someone that might own a few shopping centers and they just want to diversify.
Right.
I, I'm a bit probably original on this is that I don't think the average person should invest in industrial real estate, which is probably a confusing statement to make from someone that spends so much time in it, and I'm such a big ambassador for it. But I don't think the average investor should do it unless they're prepared to spend a considerable amount of time really understanding the industry, getting a master's degree, figuratively speaking, in industrial real estate, because it is the asset class that has the most potential for wealth destruction, notwithstanding the upside on it. And there is upside, but there's no other asset class in my mind where a mistake can be amplified as greatly as it can be in industrial. So as an example, if you bought an apartment building and it's in a major city and it's in a decent area, you're always going to be able to keep those rented. You might have to lower your rents $100 a month or whatever it is, but worst case scenario, you could always keep that thing rented. In industrial, if you buy the wrong building, you might sit on that asset for years. It might never get leased again. And that's not common. That's not going to happen in like a major market if you're buying a good quality industrial building in a mature area where there's no functional obsolescence or no major issues. Very unlikely it's going to happen there. But I have a friend of mine who bought an industrial property outside of our major city, about 45 minutes away, which is material in the size of our market. And he bought it. It was 4 years left on the lease. There was a large company that was leasing it. They'd been there for a long time. After 2 years, the company vacated the building, continued to pay rent. They had to honor their lease. That was 5 or 6 years ago now, and it's been vacant ever since. They haven't been able to find another tenant for it because it's a old, unique industrial property in a small town where there's just no demand. That in my mind is a risk that the average investor shouldn't take on. It's just too much of a risk. I don't even know what the value of that real estate is right now, not to mention the opportunity cost and the lost cash flow that he would have had otherwise. So that's where I would say industrial investing just isn't for most people. If it's a doctor or just a wealthy business owner that has money that they want to deploy and they want to invest, there's just safer ways to do it without having that risk. If, however, it's someone that does want to spend a year, 2 years, however long it takes, fully understanding exactly what industrial real estate is, fully understanding the market, and this isn't there's no central database where you can just go and get all this comparable information. And it takes a lot of work. It's like I do it daily. I'm talking to other investors or brokers or appraisers. It's an ongoing thing where I do this now as much as I did when I first started. So it takes a lot of work. And for the average investor, I just don't think that it's worth their time to, for a doctor, for example, if that doctor's $300 $400 an hour a bill rate, is it worth his time to go and now spend that working on industrial real estate? I guess that's a question he'd have to answer for himself. But there's such a steep learning curve with industrial that I don't think it's the right vehicle for a lot of investors. I do think it's the right vehicle for people that want to get to learn it, because it's a very exciting industry, and just getting to see all the different types of businesses and how they work within the economy and the contribution that they make, and seeing how people's business evolve. It's one of the reasons that I get so excited about it. And if that is what somebody wanted to do, and if they're not willing to spend the time, then I would say look for somebody that you can partner with, either on a JV basis, someone that's done it in your market specifically, or where you want to invest, not somebody in a different market, because the industrial curve on just learning about properties is one thing, but you also need to be an expert on that market that you're investing in. So you need to bring someone to the table that is very competent in industrial real estate, as well as very educated on their local market. JV could work. You could do a syndication. You could be a limited partner in a GP fund where the GP is the general manager and you're just the financial contribution. Or you can invest in a REIT, where Prologis is a good example. There's a few in Canada as well. And I'm in all three. I own properties. I'm an LP in a couple properties, and I own some industrial REITs. So there's not a right or wrong way on how to do it, but someone, if they are going to go the direct investment way, they've got to be eyes wide open exactly what your downside risk is. And until you can fully identify what that downside risk is, I just wouldn't recommend it for the average investor.
Mm-hmm. Yeah, I would tend to agree. I think there's such a steep learning curve that it really speaks to the fact that, you want to partner with someone, or you want to look for, a competent operator or a REIT or some other sort of vehicle that you can use to leverage this asset class. Because obviously there's a huge upside to industrial real estate, but you're right, the downside is pretty big as well. So you really need to make sure that you're investing with someone who knows what they're doing, who's got experience, and who can understand and sort of navigate all those potential pitfalls. So yeah, all very, very valid points there. Okay, so maybe just looking ahead a bit, Chad, I wanted to get your thoughts on, what you see is coming down the pipe. We talked a little bit about some of the sort of trends, onshoring and different things like that. And we mentioned technology, but I'd love to get your thoughts on, the future and what you see coming down the pipe with industrial real estate. Obviously, technology is going to have an influence on things, the different sort of factors in the market with, where manufacturing is happening and taking place. That's obviously going to drive some of the demand. But we'd love to get your sort of thoughts on sort of what you see coming down the pipe and maybe some of the things that are going to impact the industrial market as a whole.
It's funny, we haven't talked about interest rates yet. And
Yeah.
That's a natural point to bring it up, because I think interest rates will be the driving force for the foreseeable future. And it's not talked about enough, but interest rates have had a devastating impact on real estate across the board, especially investment real estate. Properties that are designed for owner operators, and even in the residential market, that hasn't been impacted because people still need a place to live. Companies still want to own real estate if they're owner operators. But on the investment side, interest rates have had a pretty big impact on values. And we haven't seen a whole lot of sales on the investment side to really pinpoint where the market has landed. And even saying landed is a bit of a misnomer, because it's always changing and evolving. But where is the market right now? And I think that cliche term that I've heard way too many times is price discovery. We're trying to figure out where the market is. And there's truth to that, because it's very hard to say that the investment market, whether it's office, retail, multifamily, or industrial, hasn't had a significant drop in no other reason than cap rates have gone up as interest rates have gone up. My best guess is that we're 15 to 20% down from where we were spring 2022, 2 years now, I guess. I think we're 15 to 20% down. Now, that might be offset if there's some escalations in lease rates, if you could perhaps find other ways of raising your NOI to offset the increase in cap rates. But all things being equal, if the leases haven't changed, nothing else has changed, a property right now is 15 to 20% down from where it was in 2022. There's factors there. Some people might want to place money anyways. They might be cash buyers. They might think that there's future upside. So there's variables there. I always caution making blanket statements, because there might be someone, you and I both know, a property's only worth what someone's willing to pay for it. So if someone's willing to pay more, that then all the power to them. But me evaluating properties right now, I'm a 15 to 20% less than I would be willing to pay 2022. And that pains me, because I still have a lot of properties that now have faced a similar erosion of value. I think, and my crystal ball is super murky. Like I don't even know what's going to happen once we get off this call. I can't even predict that far into the future. But I think we'll see some relief on interest rates at some point. I don't know if it's going to be 2024. In the fall, I thought it was inevitable that we'd see some, if for no other reason than there'd be political pressure to lower interest rates to show everyone what we're doing for the economy. And in Canada, we just tend to do what the US does. So if the US had to lower interest rates for political pressure, that we probably would right after. And that hasn't happened. So it's fun. Like, I'd love to get your thoughts on this. So the cynic in me says that the inflation numbers are all manipulated anyways. It's what you decide to include in the basket of goods. It's what you assign the weighting for the basket of goods. You can engineer almost any number that you want for inflation. And if the feds are pulling the interest rate lever to try and counteract a number that's already being manipulated, how accurate is this system, and who actually knows? I don't even think Powell in the US knows where interest rates are going to go, because there's no sense of what the market is. It's propped up by all this financial stimulus, so much money that got printed, hasn't worked its way through the system yet. I still see a ton of inflation on everything that I do. Food, travel, everything seems to be more expensive, but we get told this 2%, or we're getting close to this 2% inflation target. I just think the whole system is rigged. What do you think on this? I don't even know what to think.
I would tend to agree. I mean, it's so complicated, right? There's so many factors, and there's levers that the Bank of Canada is trying to pull with setting their overnight lending rate. But then that rate has an impact on inflation itself in terms of the cost of housing, and that is part of the basket of what goes into that inflation number as well. So it's like everything is linked together, and I think the one variable that is a big unknown across the board is just sentiment. Sentiment plays such a big factor into this as well. If people are feeling good, they're going to spend more, right? And if people are worried, they're going to tend to spend less, be a little bit more conservative, tighten up. And so that whole sort of idea of sentiment is something I find fascinating, because it really plays a factor in a lot of the decisions that are being made out there as well, right? And then that can swing one way or the other. But fundamentally, the things that I keep an eye on are immigration, obviously, and interest rates. Because one is controlling the cost of that housing and those purchasing decisions. And then the other one is obviously driving a lot of the demand, right? And so here in Canada, there's been a lot of talk recently about, the levels of immigration that we're having, and not being able to respond correspondingly with providing housing and just providing all types of real estate. So I mean, I just see a huge disconnect there in terms of the supply and demand because the federal government, for the most part, is controlling the supply side. You know, they're or sorry, the demand side because they're allowing certain levels of immigration, whereas it's left up for the most part to the municipalities and the provinces to take care of the supply side in terms of how much they're building and how long it takes. And so again, that's just another huge disconnect for me. Like it's just I don't know how you fix that really.
When it underscores just how complex and nebulous the process is, and it's infinitely complex because that doesn't even take into account all the geopolitical issues and everything coming at us in every direction, and civil unrest and the bipartisanship, and just, there's so much going on that that's why economists have a very difficult job, is they're trying to make predictions in a vacuum when we're in anything but a vacuum.
Yeah.
So it's anyone's guess. Like I'm in a kind of short summary, I'm very bullish on industrial long term, but I have no idea. Like, anything could derail it at any given time. But I'm not a short term thinker by nature. So if something catastrophic happens in the economy, I hope that I'm just my balance sheet and reserves. I hope that I'm just in a position to weather anything in the short term, because I still am very bullish on the long term trajectory, still just continuing to go up.
Yeah, for sure. And I think industrial and to a larger extent commercial is a nice asset class to be in when there is inflation because of the nature of the leases, if you've set them up properly with triple net leases and things like that. So you are covered to a certain extent, but it does make it more expensive all around. So that impact is going to be felt no matter what by your tenants at the end of the day. So
Yeah, agreed.
so maybe just kind of wrapping up here, Chad. Any other thoughts on the future? Love to hear about maybe what your plans are with the podcast or any other initiatives that you got going on. Maybe talk a little bit about your plans. And I know obviously we're not talking about predictions here, but what sort of plans that you have for your podcast and your brokerage and things like that.
Yeah, podcasts have got still a number of good guests lined up. I'd love to talk to you after actually as well and see if you'd be interested in
Sure.
being a guest. One thing that I'm really exploring this year on the YouTube channel is I've started become reading a lot more on industrial heritage, older industrial properties and the history behind them. So the one that I just did a video on not too long ago was a warehouse that Frank Lloyd Wright designed.
Yeah.
So he's known for many buildings, Falling Water and the Guggenheim Museum, and I think he's done over 1,000 buildings. I found out that he did one warehouse. So I was just intrigued. So I just had to research it and study it and found out some cool facts about it and made a short video about it. I don't know if those are popular or not. I don't know if anybody really cares about a warehouse that Frank Lloyd Wright designed. I liked it, and I just liked the process of researching it and finding out the history behind it. And one of the world's greatest architects designed a warehouse. The nerd in me just says that's cool. So
Yeah.
I've started making a list of, and I think of about 20 buildings right now that I want to do something similar with all over the world. Fagus factory in Germany's one, the AG building in Berlin's one, the Ford factory in just outside of San Francisco that was converted into more upscale adaptive reuse. I got about 20 on that list, and I want to try and do one every couple weeks. But that to me is just interesting. That's the obsessed and passionate side of me, that I'd make these videos even if nobody watches, just because I like it so much. So that's one of the things I'm just excited about on the video front. And it's very similar status quo on the industrial side for investing. I'm still looking for deals. It's harder to get something to make sense these days, but I'm still actively looking and just continuing to work in brokerage as well. It's a pretty good situation where I get to spend so much time in something that I just thoroughly enjoy so much.
Yeah, that's awesome. That's awesome. Okay, so as we're finishing up here, Chad, if people want to find out more about you or to connect with you, where's the best place to do that?
YouTube is a great one where I'm pretty active on YouTube. I usually make a video a week or at least have a podcast episode out there once a week. LinkedIn and Twitter, I'm also somewhat active on. Probably Twitter more than LinkedIn right now, or email. You have my email, so you're more than welcome to put that in the show notes too.
Yeah, definitely. We'll put all that in the show notes. Okay. All right. Well, this has been a great conversation, Chad. I really enjoyed it with the fellow industrial real estate guy. I think it's been a good conversation, and yeah, I think, as I mentioned before, I think you're providing a lot of value out there. So really well done, and I want to kind of encourage you with what you're doing. I think it's providing a lot of value. So yeah, way to go.
Well, I greatly appreciate that and love this conversation as well. So thanks again for having me on.
All right, Chad. Thanks a lot.
Thanks, Stephen.
So hope you got some value out of this podcast episode. I invite you to like and subscribe to the podcast, leave a review, leave a comment, let us know what you think. And for any other information about us, what we're doing, and the types of investments we're into, please visit focuscapital.ca, and on there you can find a ton of information, additional podcasts, and a lot of free resources. So that's it for this podcast episode. Bye for now.